Good afternoon, everybody. Welcome to TraderMerlin Show. Hello, Gary, Richard, Mario, Jeff, Jorge as well. We got a male-dominated group. Where'd all the ladies go? Hello, Ivzy as well. Hope you guys had a great trading session out there today. I received a ton of questions over the last, probably week or so pertaining to different areas and aspects of trading platforms, and a couple that really showed that some people were kind of maybe confused on order routing, how to send out orders. So I thought the topic for today would be convenient to talk about trading platforms and order routing. Again, just trying to come up with some fresh topics for you guys that you might be interested in. Of course, you always can send in your topics and suggestions by going to TraderMerlin.com, and I will get to all those as soon as I can get to all of them. All right, so I'm going to show you a few different platforms today. I was kind of hoping that I could move away some of my account numbers. So unfortunately, my account numbers are going to be displayed here. Hopefully, my accounts don't get hacked because of the viewers that are out there today, but we'll do the best we can. All right, I figure I'll start off with the trading platform and question stuff first, and then I'll get a market overview near the end. So let me just go ahead and just kick right off with this trading platforms and order routing, and we'll take it step by step. It was all kind of spurred by this question from Zach, which actually came in last night. It says, I'm looking to get back into trading. What would you recommend for tools, training to get started again? Obviously, there's a lot of tools and platforms that didn't exist 10 years ago. To be honest, it's all pretty much the same thing. If you look out there with regards to platforms, they're all pretty much identical. So it's hard for me to answer that, Zach, saying, what should you be looking for? Certainly there's some automated pieces. There are some, I'll put tape on my screen. Thanks, Anthony. There are some automated platforms out there and quote-unquote algos that you can buy into that help automate the process. I think it's become a bit easier with regards to interfaces on these trading platforms. But to be honest, most of them are going to have the same basic components. You're going to need a watch list, right? Some list that you can program or comes pre-programmed to, right? It's all about Tesla's battery day, guys. I cannot compete with Elon Musk. Watch list so that you can put your favorites in there. Also maybe some scans and filters for like hot list or hot watch list or things that are moving. I'll go over some of those here maybe in a minute on what I like to look for. You certainly want to have order execution. Now, some of you may not be needing a level 2 screen, which I'll show you here on the Charles Schwab platform. I used to have it on my TradeStation, but I don't really use level 2 anymore. So you might have to have an order entry bar. Some of you like to have a matrix or a dome or a ladder, which is basically a vertical order book instead of a level 2, which is more side by side. And again, I'll show you that here in just a second. Other things you're going to want to have, obviously, are charts. And this is where it really starts to separate the platform. Some platforms have horrible charting. Some are almost over charting. I mean, they're so in-depth on what you can do with the charting, it'll drive you crazy. So bottom line is what's important for you. Now, there is one thing that I like to have on my platforms that a lot of them don't have, which is customizable keys. I'm a fan of hotkeys and having a single keystroke. So for example, I'll have a function like F4 is buy me 500 shares at market. So basically I can just at any time hit that button and I don't have to go through and change all these settings and go through a process. I can just hit a button and I know I'm buying 500 shares at market on F4. If I hit F5, it's a limit buy at market. So to me, it's important to have those things customizable, and that's what I would be very critical of with platforms, especially for a short-term intraday guy. If you're a longer-term investor, who cares about having hotkeys, right? It's not about being the speed and catching the bid or the ask at that exact moment in time. Now, here are some of the other revelations, and this is where I have to take my hat off to Eyal Shahar, because having taught so many people and having thousands and thousands of students come through the school, not only are you learning what people are doing incorrectly and how can we fix those mistakes, or at least help those people fix those mistakes through guidance and experience, but you also find out what resources could you use or build if you had a perfect world and build your own platform that would allow you to incorporate those features and functionality into that platform. So Eyal took it on years ago as a task to build out his own trading platform, which of course is called Click. Had some hiccups along the way, but certainly there are some features within Click that you can't find anywhere else. There's some great zone drawing tools. So if you know the Online Trading Academy methodology, makes it very easy to go out and draw zones. Also, what's coming down the pipeline is full integration into things like the Mastermind Grid, which you've got 30 different markets to choose from. There's 6 different supply and demand zones for each of those 30 markets. You can click, it will automatically populate on your charts. To me, what that does is it really simplifies the process of drawing out the zones, gives you a sense of continuity and knowing where those zones are, and it's a great learning tool as well, not just to trade off of, but to learn how to draw those zones on your own. And Brendan, since he commented on this one, I do have to address this as well. Another important thing is customer service. For that reason, I can attest to what Brendan's saying right there. IBKR, International Broker, are being jerks. I think it's a terrible. Not only do I think it's a terrible platform, but I think that their customer service absolutely sucks. So I do have an Interactive Brokerage account. I've put it down to 0, and I should just close that account just because. Now they're cheap, but the platform's clunky and hard to use. So not a big fan. I have my personal choice. Brendan, you might actually agree with me on that one. So Zach, when you ask, what features and functionality are there that wasn't there 10 years ago, I would say that the thing that's showing up more now is more integration and education being built into the platform. With Click, which I'll show you here, the next step is to incorporate shows like Power Trading Radio or show into XLTs right into your platform. Also, in areas of the platform that you may be unclear with, there'll much be easier access to tutorials where you don't have to go out to a third-party site and try to find what you're looking for. You can simply click on that window and it will start to give you some play-by-play of how to use the features and functionality. So, to me, that's pretty good. Is that in Click already with the MM Grid? I know that they were. I saw recently in one of our recent company meetings that they had it integrated but not released yet, so it worked and it looked freaking awesome. I'm actually. That's probably one of the more excited I am for a piece of software is seeing Mastermind Grid completely integrated into Click, which will completely be a game changer. Not, as I mentioned, just from a trading perspective, but also from an education perspective. Imagine this: you've got mastermind levels that are drawn by people who are teaching the courses and have been doing this for a long time and have a great idea of where these supply demand zones are, and they're mapping out those zones for you. As a student, what's great is you can go out there in your platform, try to find those zones yourself, right? Really work through all the bad garbage that's on the chart and find out the real important zones, and then click on that button and see how they line up. To me, that's a fantastic way to learn and apply the craft of supply and demand methodology. Does Interactive Broker have the lowest margin cost? Not necessarily. Generally, for most asset classes, they are going to be very, very cheap, but there's other firms out there that will be even cheaper. But be careful, it's not all about price. Again, customer service is really, really critical. You want to make sure you have some support there, because if your system starts to crash or you can't figure out what's going on and trades are going haywire and you can't access those people and get some decent customer support, you're in a world of pain. I've actually, over the past couple of years, actually had some problems with TradeStation. For years, it was some of the best service. There was a company out there called Townsend Analytics, which ran a company called RealTick. Then there was, what was the other one? Rush Trade. And I'll tell you, just from a personal perspective, if you use customer support a lot and you're one of those people who's just needy, no offense, but there's some people out there who are needy and are always asking for help and help and help. Do yourself a favor. Find the person that you're working with on a regular basis, get a name, get on a first name basis so they know you, and then every year send them a gift. Send them something special to know that you appreciate their service, and your service will go up exponentially. It's a really important thing to do. So Lori says Thinkorswim and Charles Schwab is pretty good too. Yeah, I like those too. So let me go out and show you a couple of different platforms here, just to show you how there's such a similarity between these platforms. I really strip things down to the bare minimum. So here I have, let's see, let me just delete, let's go view, take off status, and all right, so here's TradeStation, and I know many of you have used TradeStation. It's one of my favorites. I do most of my analysis through TradeStation because I like their radar screener. I think their radar screener is probably one of the best features of the platform. I do like the charts, but for those of you that know how I analyze markets, the radar screener is great. For example, I've got this all linked up here. It's real quick and easy once you get used to it. Here is a watch list that I have of a few hundred stocks, right? So you guys know that hammers are my favorite patterns. Well, if you look here, there are a ton of hammer patterns today. So I'm just going to basically look for tomorrow. So if I was going to set up my day for tomorrow and really make it easy to find something to potentially trade, and this is exactly what I do every day, guys. I'll go through here, and I don't like, I actually do like this one on Boston Scientific, although I might classify this as a drug stock biotech. But it's got a great hammer formation, although it's not at the dead low. You guys can see that it's just almost like a double, really bullish candle. So I might keep an eye on that one for tomorrow. NTAP, similar to Boston Scientific. What do we got? eBay, nope, not a fan of eBay's chart, nope. And I'm just looking for things that jump off the screen at me. For example, this one, ABV, would have been great yesterday as a gigantic bottoming tail on that thing. but it just didn't follow through. So I would just ignore it, move on to something else. And I don't want to spend a lot of time forcing myself to see it. Here we have a really good example on Xilinx, chip maker, semiconductors. If you look at that last 2 days, you've got almost identical candles with really long bottoming tails. That tells you that buyers have stepped up for 2 days in a row and supported Xilinx right at $98 per share. This looks like a great potential buy. So I'll just write down on my piece of paper XLNX, and that will cause me to revisit it. And I will show you something about alerts here in just a minute. So again, I would just flip through here looking for ones that jump off the screen at me. A lot of these don't look great. Xilinx is probably my favorite so far. And again, I could go longer into what I'm looking for, but I just want to make this quick so I can get back to other areas. This is similar to on the Xilinx one on Striker, where you have almost double hammer formation back to back. So that could be potential good because you have that good opportunity because you have a nice gap as well. How did I add the hammer? Okay, well, I'll show you that in a little bit. I just wanted to show you quickly how this is basically, when I have one screen, this is how I will have my TradeStation set up. I just kind of need to look and see what patterns are forming and what looks good on the price chart. Now, of course, I have 3 screens here, so when I'm not doing the show, I can look at multiple charts and time frames as well. There's also different ways to set up. Like here, I have sectors, but you can have multiple charts. And 2 of my screens look just like this. On the top, it will have the market. On the bottom, it will have the stock, and it goes daily, 4 hour, 60 minute, and then 15. So I've got 8 separate charts up at once. That's just that might be overkill for some of you. So that's TradeStation. TradeStation, you can add in all these different features and functionality. I mean, there's a ton of stuff, but I just keep it down to the bare minimums. Now, let me go over here and show you. I have to go to a different screen. Let's go from TradeStation, and I will show you, how about Street Smart Edge, right? So here's Street Smart Edge. And you notice it has a lot of similarities. You've got your watch list. It's not as intuitive to me as TradeStation, and that's probably because I've used TradeStation forever. Here you have your level 2 screen on the left-hand side, which is basically showing you all the buyers and sellers who are lining up at that moment in time to buy. So right now on Microsoft, you can see we've got a 16-cent spread. If you want to buy it at market, you're going to have to give up 16 cents, or you could negotiate that spread using ECNs or direct access, which you have here with Street Smart Pro. That's another factor also is how you send those orders. Before these questions get too far away from me, I'm going to try to read some of these. Let's see. Merlin, how do you add the hammer? Okay, I'll get to that one in a second. There's a reason I focus on crypto, much less red tape. Okay. What are your thoughts about TS10? I don't think 9 points. Oh, really? Anthony, I tried to use it, and here's kind of the problem. I'm so used to TradeStation 9 series, 9.2, 9.3, 9.5, that I've really... That's what I've used forever, and I'm afraid to go back through and use a new version of TS10, which is very different. But you know what? Maybe I'll just have to do it and just bite the bullet because I'm going the way of the dodo. So maybe I will switch over to TS10. But in the past, I did it when it was first rolled out, and I did not like it. It was just not for me. Can you talk about bankroll management in terms of how much of your portfolio you'll have exposed to day trades? All right. Colin, remember that one? I want to make sure I get through the topic du jour, which is going to be platforms, and then we'll go into some of the mechanics of portfolios in a bit. So back to your Street Smart Pro. Not a lot of difference here. The charts are a little bit... I don't know. I don't think that they're as good with regards to customization and ease of customization that they are with TradeStation. There's another platform out there that many of you might want to check out, and I think it's a really good platform. It's just really cheap, and that is TradingView. Right? TradingView is a web-based platform, so you lose some of the functionality, but it's a pretty decent platform as far as charting, analysis, things you can do, markets you can access, but it doesn't give you things like market depth. It's just not as good. It's really just a charting platform. So those are some of the basic pieces that I'm looking for in these trading platforms. And again, you can change the colors and fonts. A lot of it's customizable, but it's really about what you are looking for personally in a trading platform. I mean, they're all so very, very, very different. So there you go. I got 3 platforms out, and actually another one here, which is many of you guys know about, which is going to be Click. So here is Click. They've really tried to remove a lot of the fluff. You notice the difference between Click, guys. I'll do real quickly, go back and forth. There's not a lot of buttons that will distract you. And when you look at something like Street Smart Pro, there's buttons and stuff all over the place. And that's really a testament to what Eyal and his team have done and saying, look, most of the crap on these platforms you're not going to use. So why even bother putting it on your screen? Because you're going to spend more time learning how the bells and whistles work than you are actually going to be focusing on trading. So Click is really a much more pared down version of some of these platforms. Not that it's not powerful, it's just as powerful. It just doesn't give you garbage you don't need, right? I mean, you're sitting here in Southern California. I don't need heated seats. Well, most of these platforms give you heated seats. Okay. Yeah, wanted to show you that one. And again, just that Pepsi challenge between these two, showing that they can be dramatically different with regards to features and functionality. All right, let's see. Let's go to this one. This is from Armando. You know what, Adam? I used Ninja years ago. I have not used it in a few years. Right now, I don't use Interactive Brokers anymore, but I still have an account there. I use TradeStation, I use Street Smart Pro, I use E-Trade's platform, I use Ameritrade's platform, I use Schwab's even web-based platform, I use Click and TradingView. Those are the platforms I'm using. I actually have a Thinkorswim, but I haven't really used it too much, so I can't really say I'm an expert or versed in that one. But again, they're all going to be really similar. And something you might also want to know is like Thinkorswim, when it was built, it was not built to trade stocks. It was not built to trade Forex or futures. It was built for one purpose only, and that is to trade options. So when you look at an asset class that you might want to trade, if you're an options guy, many of my options friends will tell you that they think Thinkorswim is the best thing out there. That is until we get Click up and running with options, because we've gone through and basically taken all the best features of Thinkorswim, removed the pieces that we don't really need, added in some proprietary pieces, and now you have a better platform out there. But again, that takes time. Adam, because of what happened with the FTC, that trading live on Click got put on hold. I don't know the timeline for it, but it's very, very soon. I know that they were actually, you could, and I think it stopped. I'll have to get clarity for you on that one. All right, TradeStation futures and charting, then this for options. Cool. Yeah, I TradeStation for me, charting-wise, it is about as good as it gets. So let me go to this question from Armando. Armando says, I recently came back to trading using TradeStation platform. When I try to set confirmation trades, they get rejected because the messages tell me that my stop has to be above the last traded price. When I do the same thing in simulator mode, I do not get the same messages. Seems that live trading in TradeStation is trying to force you to trade in a certain way. Okay, so what I wanted to do here is I'm just going to do a really quick graphic. And I apologize, I didn't have a lot of time to do this. I've been working all day on some other stuff, so bear with me. This isn't a college level diagram I'm going to be showing here. But one thing I've noticed, I'm going to quiz you guys on this too, is you have to make sure that you use the right order. It's not just that the system may have rejected you, it's the specific order that you've used may be the issue. So let's go and show you an example. So here we've got an example of a bracket order, and I'm using a bracket order for a long trade, right? Long meaning you're buying low, selling high. And you can see a bracket order, for those that might not know, works in this manner. You're really sending two orders out to the market. You're sending one order to buy it, which would be your entry price. And you can see there that it says entry $10. And then you have your target and stop loss. Those are sent out kind of as, they're two separate orders, but they're bundled as one. And that's the bracket. And basically when you do that, it says if, think of it like an Excel formula. If price hits $10, go ahead and buy it. And then I want you to automatically put a target and a stop loss. Target of 9, stop loss of 15. And whichever one of those numbers gets hit first, cancel the other one out. So let's say we bought it at $10. It triggers this bracket, this blue line here, and it gets up to $15, hits our target, closes the trade. The stop loss order would disappear automatically because it already filled one side of the bracket. The other way is if it dropped all the way down to $9, we took a $1 loss, and the target order gets canceled. That's a bracket order. It's called a order cancels order. One cancels other, OCO order. So here's what I think might be happening on the gentleman's trade who is having an issue. So let's say, for example, we go here and current price is $9.50. So you can see the bracket order. You see the logic, right? I've got a 5-to-1 reward to risk ratio, right? Trying to make $5 and I'm risking 1. And current price is $9.50. So right now, let's say this between 9 and 10 is my zone. It's my demand zone. And I want to buy once it leaves the zone. I want price to confirm or tell me that it's left. So I don't want to buy it at $9.50. I want to buy it at $10.01. Does that make sense, everybody? I'm waiting for it to break above just that $10 mark, which is maybe it's the top of my supply zone or demand zone, and I'm looking to buy when that happens. Here's the problem. I'm going to ask you a question, and I would love it if you guys typed in what you think is going to happen. What do you think would happen if for my entry type, I put limit buy? So I said limit buy at $10.01, and I did it right now. Markets are open. You did a limit buy at $10.01. What's going to happen immediately, guys? Type it in the chat. I want to make sure that you guys all understand how order routing works, because I believe that part of the confusion here is you're looking at an if scenario. If price gets up to $10.01, you want to buy it. But remember, it's at $9.50. So if you put in a $9.50 limit, or sorry, a $10.01 limit order, and it's currently trading at $9.50, what are you going to get filled at? Right? Come on, type it in. I know I have to do a filler talk because, you know, we got to let that delay that YouTube likes to put on these streams. Ivsy says you'd be filled. Yeah, that's correct. But at what price? Right? Would you be filled at 10:01? Because remember, that's what you're telling the computer to be filled at 10:01. And it would not be rejected, Mario. You would actually be filled immediately. Because if you look at what the screen is saying, I don't, let me find my red pen here. I know I've got the red pen somewhere. One second. I love having my red pen, which proves my horrible drawing skills. There we go. I'll go to the pen. Since we set this order right here, it says limit buy at 10:01. What you're basically saying to the computer is, I want to buy it at no more than 10:01. And the computer's looking at you going, hey, brother, it's at 9:50 right now. So you would be filled instantly. And this is the problem. You have to do something different here to get this order filled in the appropriate time. So I already let the cat out of the bag. Yes, Ivsy, you're right. It would be 10:01 or lower, but at this point it's trading at 9:50, so 9:50 is where you'd be filled at. And Anthony, you're correct too, at market. So the problem is this order may be rejected by how you're setting up your entry type. So if you wanted to do it as a trigger, or what's called a conditional order, you'd have to do something like this. A stop limit. And you're like, well, wait a minute. Shouldn't a stop loss be a trigger for losing, right? And that's what a stop is. It's kind of an industry misnomer. That stop order is simply a condition. Think of that stop as saying if. So what it's saying is if that limit price is hit at 10:01, then send the order. That's the conditional piece here that's so critical for those of you trying to play these breakouts of a range. So in that example, what would happen is if you put that order in right now and said, put a stop limit, actually you'd probably want to do a stop market, by the way, just to be safe and make sure you get it. And I can explain that if you don't understand why you limit versus market in that example, type it in and I'll explain it. If you did stop limit buy at 10:01, then the order would go to the system and it says, okay, he wants a trigger if it hits 10:01. Right now it's at 9:50. So it would literally wait for price to move up and touch that 10:01 and make one print in the transactions, time and sales. And then all of a sudden you would now be executed, or the order would be sent to market. Okay? I'm hoping that helps clarify this, because a lot of people do this with bracket orders. They'll put that limit buy and all of a sudden, boom, you're filled instantly, and you didn't want that. You actually wanted to wait for that 10:01 to get hit before you bought in. And this is a very, very common mistake that traders will make. Now, once that's done, I believe what's happening is the individual, I'm not quite sure, I have to see how the order is being put in before we go too deep in the explanation here, but my guess is you're getting filled right now somehow, and you're putting your stop loss above that current price. So it's confusing the system in live mode. I believe it's just order of operations that you're putting the order in wrong. And if you send it to me, what's the gentleman's name on that one? I forgot. Armando. If you send me maybe a screenshot of it that's kicking it out, I can fix that for you and tell you exactly what you're doing wrong. But it's most likely that you're putting these orders in incorrectly into the system. All right, you guys good with that? I'm hoping that explained it and cleared up a little bit. I know most of you get it, but if you are a breakout trader, and I love breakout trades, you guys saw Corey Lane talking about breakout trades as well. A lot of times that's going to be using stop orders. Now, do you guys understand why in this situation you want to use a stop market versus a stop limit? I mean, that's kind of critical as well. I don't want to go back to basic education stuff here, but if it's not clear or you want to know more, you just got to let me know in that chat, and of course, I'd be happy to tell you more and more about that one. All right. So I will wait for you guys. Cool. Got it. It's clear. Dana says it's clear. I got one accepting. Good. I'm good to go. Let's see. I'm going to go to another question here to get through some of these. And I thought this was kind of funny, Alan, but you did send it in, and it's a probably legitimate question, so I will happily answer this one for you. The question is, what's considered long-term charts for you, Merlin? Anything above 1 day? Oh, yes. I look at the longer-term time frames as anything above a daily. And I usually start with daily. I know some of you have been following Tilly. For her, it's starting off on that weekly time frame and then whittling down. It doesn't matter to me what time frame you guys are trading. If you're a day trader, I still think you should start at the daily. That's the bigger trend, right? And as long as I can see back a couple of years, then I'm fine. So let me show you on TradeStation, just simple. I'm starting on the daily right here. This I would not say is showing me anything long term. So it's not just that I have a daily. It's that real quickly I can go back and check, okay, I've got about 2 years here. I can see the big picture. I kind of know where things have come from. I know where they may be headed. And I can certainly discern the major trends that are happening. In this case, we got Synopsys on there. One that was kind of fun, guys. I don't know if you've been following the fun that's going on with Nikola. And didn't you guys hear me say back here that I thought this might be a little bit of a scam, a pump and dump thing? You got to love what that guy did. Walk away, he forfeits, $160 million, but hey, you know what, if I made $1.2 billion by pulling the wool over people's eyes and nobody knew it, that'd be awesome. Unfortunately, I have a moral compass, and that would not happen. So it's important to me that you guys always start off bigger picture. Now, for Alan, you might look back at the weekly, and that might be, let's go to something that's real. Let's go to Microsoft. That might be where you start your analysis. Great, it doesn't matter to me which one. It's really all about making sure that you see that big picture. And then if you go from here to the 4 hour, as some people were asking about, yeah, 4 hours, great. But you see here, when I go to the 4 hour, I only have a month worth of data. So, I like to start off that bigger picture, whittle my way down, and then ultimately, I'll get down to, let's say, the 15-minute time frame, or maybe even the 5 is about as small as I'm going to go. And you can see here, if I go 5-minute, I'm not seeing much of the picture at all. So I really have to be careful and use bigger time frames to see what's going on with the market, where it's come from, and where it may be going. All right? All right. I'm seeing not a lot of questions in there, Nicola Dean. What do you think, Tom? You were a fan of Nikola. I mean, is it a scam? I mean, there's a lot of fraud talk about them right now, and it's kind of interesting because there are so many people who've made tens of millions, if not billions of dollars off of what's happened in Nikola's share price because of information that may not have been totally correct. It's an interesting thing happening right now, and some people are going to walk away and just disappear into obscurity and hope that it never comes and chases them down. All right, Mario says, do you ever get issues with orders not being placed with Option Station Pro due to TradeStation errors stating valid price can't be obtained? Nope. I don't have any problem with that, Mario. I haven't. And part of it is I'm always trading options that are very liquid, right? I'm looking for things that have big open interest. To me, that's critical. Tom says GM is taking over grownups. I agree. I think that's when I mentioned it when we heard about that but the acquisition of the percentage by General Motors. I said that's the best thing that happened to them. It legitimizes them. Of course, as I mentioned, you already had what was the other name of the car company? Not Riken. God, there's another truck I like even more, but that has Ford and Amazon behind it already. This is something to be for Nikola to really make it. Another tech company's gonna have to come in there, and all of a sudden it's gonna be like Microsoft and GM are backing the Nikola truck. Now all of a sudden you got some real power. But yeah. All right, let's go to the other question here. Workhorse, WKHS. Do I think it's going to sustain its run? Well, let's go full screen and bring it up here on the daily. The answer is very easy for me. Very easy. Thank you, Tom. Rivian. Yeah, the Rivian. It's so funny how things appeal to me. Like, the main thing I like about Rivian is that pull-out sink, stove, refrigerator thing that just slides out of the bed of the truck. I'm like, this is what I want. Yes. But, yeah, the headlights look really goofy on the Rivian truck, I will say. So, with Workhorse, guys, you're just, I don't know. You're dealing with another software company, which, of course, could have tons of upside potential. Generally, when you see moves that go this parabolic this quickly, it's because they're part of a hot stock list, a pump and dump type of thing. And guys, tomorrow actually, we're going to have an interesting webinar from the Trading Academy talking about hot stocks, and this may actually work its way into the conversation, because the challenge here with something like Workhorse is a lot of times you'll get wrapped up in the hype. You get wrapped up in the excitement of it because you're hearing that it's up X percentage over, a couple of months, and it makes more and more headlines. For example, if you look from its bottom that we saw back in early June, in 112 days, this thing is up 1,000%. There's not a person here that would not want 1,000% gain in 3 months or 4 months. I mean, that's phenomenal. But then you look at somebody like Overstock. Overstock was even better, right? Overstock was at, 4,000% gain? I'll try to get this right in here. It's not on snap mode. So you have 4,000% gain. You're like, wow, that's great. It's amazing. Yeah, well, it's fallen from that point to down 52% in 16 days. This is, what you got to deal with all this stuff. So anyway, let me go back to Workhorse. I'm not looking at the technicals on this. I mean, the fundamentals. It's just purely technicals. And it does look to me like you're going to have a pretty significant retracement. And does it get down to that $17 mark? I wouldn't be surprised to see it happen. I'm not an expert on Workhorse at all, but it just seems like it's really gotten ahead of itself. And market's starting to show a little bit of weakness here. So not a huge fan of it. I don't think it's going to continue its trajectory. That's just my personal opinion on it. If anything, it's going to come back, retest some of these lows. There is a rally-based rally right around $23, which might stop there. But then you'll probably come back down towards that consolidation that we saw from July through September on this one. All right. What else we got? Stop out at 10. Ellen, which one you on? You're stopping out on Workhorse at $10? I would hope not. I would hope you're going to stop out somewhere much earlier than that. I mean, there's a lot going on with that. They'll be giving a lot of money back here. I mean, if you're long this one and you own it at whatever price, you got to put a line in the sand somewhere. Does that line in the sand? Since we talked about some of these rally-based drops and drop-based rallies, is that below? Let's call it 21. I mean, that's still $5 away from current price. That to me would be giving back too much, in my opinion. So I'm a little bit tighter on my stop losses, especially on something when I'm up as much as these Workhorse has been and some of these other high flyers out there. Okay. If you guys got questions, feel free to send those on in. There was a question dealing with implied volatility, open interest. So let me go here to Option Station Pro real quick. Yeah, Nick, I kind of agree with you too. It's really... a 25 might be that good line in the sand for me. I'd probably go just a hair below 25, so let's say 24.75 would be a good stop out point for me. That's would be more logical. Lock in some of that profits. If it continues to rally, oh well, you still did well. One of the questions that was coming through here was from, let me make sure I get the gentleman's name, from Jeff. And basically he's just having a ton of luck with DraftKings. And DraftKings with DKNG. So let's bring up DKNG. And basically said, is there more risk to this one than trading something like the S&P 500? Because he's trading, selling cash secured puts on the SPY, which is great, but you're not going to make a ton of money, right? You're going to get a decent amount of it, but you're probably not going to make tons because it just doesn't have as much volatility. Now, if you look at what DraftKings has done, I mean, DraftKings in July was down below call it $28. I'll get that exact number for you. DraftKings was $27.50 as a low, and it just hit a high 2 days ago of $55. So you're dealing with security that's moved $27, which is about 50% in 2 months. Implied volatility is going to be high on that, and there are ways we can check that. One of the keys for me with this is open interest. So again, the question is really about danger. Are you putting yourself at greater risk of trading something like DraftKings versus trading something like SPY? The answer is absolutely yes. So let me bring up the option chain for SPY here so you get a sense of open interest. And of course, you could be looking at weeklies. You could be looking at the monthlies. I'll just look at the monthly here just to make it easy. And here is your October. Why aren't you populating? Oh, because we're so far out of the money. Look at the volumes here. I know it's kind of hard to see that the fonts are really difficult to read, but you're looking at 14,000, 44,000, 75,000, 50,000, 42,000. These are the open interest on those options. I mean, there is tremendous liquidity. And the more liquidity you have, the tighter those spreads are going to be, which of course is a cost of doing business, right? If you are trading options, the spread is generally going to be paid to the market. That's your commission, an extra commission on top. So, to SPY, usually got a penny or two as far as spreads, right? Nothing. It shouldn't be that dramatic. Here you see 4 cents on the most recent one, closest to current price. That's the at the money. Now I'm going to look at look at DraftKings, right? DKNG. And you'll notice when we bring this one up here that it's sparsely traded. Here's the options for DraftKings. The biggest block of open interest I see is 8,000, and that's just right about at the money. Your spreads are all of a sudden going to be significantly wider. You're talking 30-cent spreads, 40-cent spreads. I mean, these can be rather big. So to me, the answer, Jeff, in taking apart all of the gains that you make, because it sounds like you're doing really well trading that specific instrument right now, if I were to strip out the gains numbers, because that's what you're probably focusing on, you're putting yourself at a lot of risk with this one, simply because the spreads are so wide. You got wide spreads, you have very low open interest, so it's rather dangerous. Now, my feeling is go ahead and continue doing what you're doing. I might scale back the amount of contracts because you are, like I like to call it, juggling chainsaws. At some point, one of these could potentially bite you and bite you really bad. I mean, DraftKings has had a phenomenal run, but you don't want to get left caught, as you mentioned, holding like 24 contracts of this bad boy, and all of a sudden it's falling like a rock because, NFL decides to halt their season because of COVID. I mean, I don't know if you guys watched the games over the weekend, but they look so nice on the field wearing their masks, but boy, I saw some of the in-locker room footage. Man, who didn't wear no mask? And if all of a sudden your team, let's say the Raiders, I saw the Raiders locker room celebration. Congrats to John Gruden and the Raiders and their amazingly awesome stadium. If all of a sudden that team starts getting COVID, they're going to have to stop playing. The team's done. NFL stops. I mean, it could happen very quickly. And if the NFL stops, what happens to DraftKings? And this could happen in 1 week, right? So I don't know. I think it's playing with fire here. As a risk manager, I would tell you, you probably shouldn't trade DraftKings options like that. But bottom line is, you're making money with it. If it ain't broke, don't fix it. Just be careful because you got to know in the back of your mind, you could get bit by this one as well. It's been paying you well, but you could get bit. All right. Tom says, Click is a platform that routes to brokerage firms, right? Yes. It will route to TD Ameritrade, Schwab, Fidelity. I don't know all of them yet. I know it runs through Tastyworks. And the goal is to have it where it routes to any broker you want. But, of course, some brokers will go, no, we don't want to have interface there because it takes clients away from us, whatever. I know the goal initially is to have this as not a brokerage firm. AL does not want to be a broker on the end of this. He just simply wants to be the education and front-end platform so that when you go to make trades, not only do you have the best tools available, but if you guys have been using Click, you see there are some tremendous risk management pieces in there as well. There's Trade Builder, which is that six-step process that you go through in mapping out trades in class. It's built right into the platform, so you can literally just go step 1, boom, step 2, and it helps to make that repetition. And there's an old phrase that says, repetition is the mother of perfection. And really what that's doing is helping you practice that repetition so you get the whole trade input process down without making mistakes. So ultimately it will be for just about every market. Okay, I'm going to turn the AC on in here. It's getting hot. Merlin said, just a friendly reminder about how to use the hammer formation. Okay, let's check that out for you. So a couple things. A lot of platforms have scanners and filters, but they don't allow you to do as much stuff. For example, you can't really go through and do as much robust, candlestick formation, things like that. So, for example, I'll show you over here on, here's the Street Smart Edge from Charles Schwab. I've got this watch list here. Great, got a nice watch list, but I want to go add in a column that says candlesticks. Well, there isn't, right? There's some different stuff in here, but really nothing that's that complex candlestick-wise. So you're not going to get as much diversity as you do in something like TradeStation, which when I look at the fields that I could insert, all right, let me go to a different list here. I already only have this small little list, but we'll just do it with the small list here so you guys can see it. Hopefully the fonts are big enough. If I right mouse click and go Insert Analysis Technique, from here, I can go through and put in hundreds. You see this list I'm scrolling through? I mean, there are hundreds, and it's too much, honestly. This is why a lot of people don't like TradeStation. It's overwhelming. But I'll go down here and I go to C for candlestick, and it's got this cool little icon. And it says here, Shooting Star, Pierce Line, Dark Cloud Cover, Evening Star, Morning Star, Tatsuki Gap. You guys want the Tatsuki Gap? There you go. You want the 3 stars from the south? I mean, there's too many of them in here, right? So anyway, let's do, you wanted hammer. You see here it says hammer, hanging man. So I add that in, hit OK, and now it's giving me those two columns. And right now, there is nothing out of these 7 markets that I have that is showing a hammer formation. That's pretty much, that's it, right? That's how you do it, Koja. And if you want to do something else, I mean, there's a lot of things we can do here with regards to moving averages, stochastics, Bollinger Bands, things like that. You can add in a ton of different pieces. A ton of different pieces that we can do to, I guess, help us filter through these markets. I like candlesticks, but some of you want to do moving average crossovers and things like that. So, did that help you, Koja? That good? Right now, Tom, it's only for OTA. Click is only for OTA graduates. Ultimately, once we get all the little bugs and kinks worked out, as you guys know, it's going to take some time to get this thing top-notch because he built it all from scratch. This wasn't take someone's old source code and then repurpose it. It was literally from the ground up with regards to features and functionality. So it's going to take a little bit of time to get that thing dialed in properly. Once that's happened, it'll be open to the public. Ooh, Adam, I don't know anything about Eurobonds in Zambia. Sorry. You caught me on that one. I'm not going to claim that I know. I don't know that one. All right, let me go to economic calendar for tomorrow so I can wrap up here. I got some more stuff I got to do for work, so we'll go to your economic calendar for today. This was kind of interesting. I thought that existing home sales would really be surging. Now, it did beat previous month's expectations. And how do we know that? Well, it's in the middle of this red box. Previous month was 5.86 million existing home sales. They're expecting it to jump to 6.05. Only came out as 6. So a little bit of a disappointment, but still showing that existing home sales are increasing, which is great for those of you who have real estate because that means prices are probably going up. Other than that, you had the Richmond Manufacturing Index up slightly. Nothing really that big of a deal there. Powell testified. Didn't really create as much waves as I thought he would. That said, he is testifying also tomorrow. And here's your calendar for tomorrow. Red box shows you the U.S. stuff. We have FOMC members Mester speaking. We've got Powell speaking. We've got Quarles speaking. So it could be a volatile day. Notice the times on those as well. Those are going to be Pacific time. You also have flash manufacturing and services, PMI, and crude oil inventories coming out tomorrow as well. And that, my friends, will do it for your economic calendar. There was earnings today. Nike had blowout earnings. Of course, somebody's probably protesting Nike somewhere, and Colin Kaepernick is laughing all the way to the bank. Tomorrow you have earnings, but it's really only General Mills. It's like the only company that's noteworthy for tomorrow. I did not look at ACB. I know that ACB reported earnings after market today, so let's just real quickly, as I go out here on their outro, go to Aurora Cannabis Growth. Check out how that weed stock is doing. Ooh, look at that little pop there. Ooh, lordy. Told you, last time it came out with earnings, man, it had a big spike. Ooh, I should just give a womp womp. It was rallying really good, came out with earnings, and obviously erased all of those gains. Good thing I didn't buy those calls on ACB. I was going to actually buy some deep out of the money calls, and I'm glad that didn't happen because right now it's tanking. It went from 760 down to 625. You guys have asked about Tesla. I have not been following it. I don't really waste my time with it. I know I'll just follow out what happened tomorrow when the big press release is out. My guess is he's saying something good right now because it's starting to rally in the after-hour session a little bit. All right, guys. That's going to do it for me for today. Tomorrow, let me see. What do I got cooking for tomorrow? I managed to get David Warner to come on the program tomorrow. So I know we've got a lot of people here talking about, or they want to talk about Forex markets. Maybe not the bearer bonds or the Euro bonds in Zambia, but who knows? I'll throw it out at David tomorrow, see if he wants to talk about those. If you have something you want David Warner and I to cover, I want to keep it on one of two areas. Number one, either keep it on some currency. Dollar is a very hot topic, and I still am bullish on the dollar. Number two would be Feds and central banks, Federal Reserve System, central banks, policies around the world. David is addicted to that stuff. It's fun watching him geek out on what's going on with regards to central banks and ECB and things like that. So if you have any questions, feel free to send those on in at TraderMerlin.com. You can always email me there or comment your videos down or comment below the video here. That gives me an idea of what part of the show you liked or disliked. If you have any suggestions, again, email me, let me know. And until then, give me a thumbs up for today's show. I'll see you tomorrow, guys. Take care.